What's up, everyone? Welcome to the daily macro update for Friday, September 12th. Taking a look at some of the macro data here today. We got the University of Michigan Consumer Sentiment Index showing that sentiment fell for the fourth month in a row, as well as inflation expectations remained steady on the 1 year and rose on the 5 year. Now, a lot of people have been critical ever since their changes were made back in April of 2024, from going from phone interviews to more so of an online questionnaire, and that it also leans a tad bit more pessimistic. So you do have to take this University of Michigan surveys with a grain of salt, but they're still pretty reliable, and they give a pretty good some pretty good data here. And so, even if it's not as much of an acceleration, you can see that this is the general mood of consumers here. And so, yeah, I mean, we got inflation data this week. We had PPI decelerate and consumer prices continued to accelerate. Consumer prices rose to 2.9% from 2.8%. And then the Cleveland Fed is having their inflation nowcast suggest that for the month of September, it's going to rise to 3.0%. And so inflation is going in the opposite direction than what the Fed would like to. And so they're cutting rates into this. And so, really, the meeting is next week. And there's right now a 94% chance that they're going to cut by 25 basis points. And usually the futures market is pretty accurate the closer that you get to the meeting. And so I would not be surprised if they cut by at least that. If they remain paused, that would be a huge shock to the markets. But in the short term, when the Fed is stimulating as inflation is accelerating, this devalues the dollar, and in turn, in the short term, pumps up asset prices, which is exactly what we're seeing right now. Not only cryptocurrencies, but the best performers so far over the past couple weeks has been small cap stocks, right? So taking a look at the Russell 2000 here, if we compare that to the S&P 500, let's do same percent, and then we'll do the past 5 days. Actually, let's do the past month here. All right, so yeah, let's see. The Russell 2000 has pretty much, doubled the monthly returns. So that's, pretty interesting there. But yeah, so, I think that when you see this type of risk on environment happen, you want to be able to participate in it. You don't just want to sit on the sidelines. And, with all of the pessimism that have been going on, the market has gone straight up. And this is why in this post-pandemic environment, you want to make sure that you are prioritizing the current trends that are happening right now and not what the potential future risks might be, even though those risks are, pretty clear and evident that they exist. But you do not want to invest in a way, and this isn't financial advice, but, from what we've seen, if you're taking your money out of the market because of you saw a news article or you saw some type of narrative that made you have an emotional reaction in fear, and it's based off of something that could happen at some point in the future, then you are not trading. You're just letting things manipulate you. And so in order to not do that, you have to follow what the trends are and be able to identify the different condition sets from where they are right now, where they've gone, and where they are most likely headed in terms of probabilities. And, right now we're heading into this environment where you have the Fed stimulating the market while inflation is remaining sticky. That's really an environment where you want to be able to not own things that will continue to be devalued, like the dollar, right? So cash is really trash. And, when looking at this, you want to be invested into the right things, right? So what have been the things that have been the best performers? Well, you have things like precious metals, taking a look at the precious metals fund here, right? DBB, that has continued to do pretty well over the past couple months here, along with gold and silver. So silver really just completely gone vertical over the past, 5 months here. I would not be surprised if we see $50 per ounce for silver here. But again, if you compare this to the S&P 500, I mean, just take a look at, let's do year to date. Year to date, the S&P 500 is up 12%, while the price of silver is up 46%. And you don't normally get that during environments where inflation's coming down. Okay. So, you still have all these stagflationary types of environments. Check out gold versus the S&P. Gold not up as much for the whole year than silver, but still, 39% compared to 12%. Gold and silver have been outcompeting the market by, more than triple there. So that is very interesting to see that. But, you don't really hear people talking about gold and silver too much in the mainstream media for whatever reason. And then if you really wanted to get some juice, look at gold miners. Gold miners up 98%. I'm sorry, up 102% from the beginning of the year versus 12% on the S&P. What about gold junior miners? 107%. What about silver miners? Up 104%. So, yeah, it's been an incredible year for miners. As well as not only that, but look at Bitcoin miners as well. If we take a look at the ticker WGMI, it's really had a pretty crazy acceleration the past couple weeks here, but up 62% year over year, or I'm sorry, year to date, versus the S&P's 12%. So yeah, a lot of these there's been massive bull markets other than the S&P 500, and if you haven't been able to capitalize on these and you've been stuck on the sidelines, then you really need to just be honest with yourself and be like, I need some type of strategy here because I am missing out on these massive gains and things that aren't really, I mean, silver is volatile, but something like gold doesn't have a big volatility profile, right? I mean, could you imagine you're just invested in gold that has lower volatility than the S&P and it's a better performer? I mean, that you can't even beat that, right? So in order to identify these different macro scenarios, you need to be tracking the trends. You need to be educating yourself on what all these different scenarios mean. You can definitely do it yourself, but if you'd like to speed that process up, I would highly recommend going to some of the links below, or if you're looking on Instagram, go to our 7-day free trial link that's in our bio there, and get started in our macro investing community. Apologies for my voice right now. I've been sick for the past couple of days here, kind of just getting over a cold. So appreciate your patience with the little bit of a dampened enthusiasm here. Volatility index of the S&P 500 remains below 15. This is at extremely low levels. That typically when it's below 15, you want to be making sure you're taking profits on things that are continuing to go up. So this past week been raising a lot of cash, getting ready for the next dip because that will come at some point. But yeah, and then you have the 10-year U.S. government bond yield falling faster than the 2-year, which is really a bull flattening signal, which typically suggests that it thinks that the economy is slowing, right? Which is definitely interesting there, while the dollar remains bearish. When we take a look at the yield curve for the United States, the green is from 3 months ago, and the blue is the current yield curve. And as you can see here, we have this little bit of like a Nike swoosh here, where you have the 2-year and 3-year yields dropping faster, and then you also have a drop in the long end of the curve here, but not as much as this drop here, right? So as you can see, just looking at the 2-year bond yield, it's gone from 3.95 to 3.56. And then if we take a look at the let's just take a look at the 10-year here. That went from 4.4 to 4.0. So nearly 4.1. So, you know, point 0.4, 40 basis points, down. That's a big sign of a slowing economy. And what the market is pricing in right now is that, it's going to get the cuts that it wants. And as a result of that, it's trying to front run a lot of this liquidity that'll be coming on board here. But the only problem is that when we look at liquidity, right? So if we take a look at central bank liquidity here, this has dropped off a ton, right? So this is mainly because the reverse repo facility is near zero, right? That's basically fully drained, and they keep trying to pump up the Treasury General account. And they need to get this to 850 billion by the end of September, which means by the end of September, this would already drag out another $200 billion from here, right? And then also too, you're seeing a drop in bank reserves. So in the background, you're starting to see liquidity tighten, and the market is essentially pricing in that this will not be an issue once the Fed starts really cutting rates and expanding their balance sheet again. So we'll see what happens from there. I mean, typically you do get this early celebration when it comes to the Fed going into a rate cutting regime. So we'll see what happens there. But yeah, I mean, base metals, commodities, a lot of things that accelerate when inflation remains sticky are continuing to go up. In the medium to long term, you're going to have issues. There's no doubt about it. But for now, the party music is playing, and so you want to make sure that you're including it in there. All right. Yeah, we got some exciting updates for you guys, though. We have our website being launched, our new website being launched next Wednesday. So keep on the lookout for that. Just to give you a little bit of a sneak peek here. Pretty excited to launch this. We have a market dashboard that'll be in here as well. Kind of have some pretty cool widgets from TradingView that's included in here. And so it's going to be able to show our, favorite sectors, top 10 stocks, top 5 active gainers, losers, which ones are doing the best here. So as well as economic calendar, top stories. But yeah, this is coming up pretty soon. Excited to launch that. And I'm going to be putting out a survey on my Instagram page to see just kind of more of what type of audience that I have these days. And so if you guys see that survey going on my story, make sure you take the 2 seconds to click your vote. But from here, we can go ahead and get into any type of questions with the market closing for the weekend. All right, we got some questions here. Anon_Human. For some of these assets that are rocketing up, such as metals, many of those having long runs. I believe on this recent outbreak of gold, you mentioned not chasing it, but if it ever pulls back, that's if you didn't end up getting in it beforehand, right? For whatever reason, you just want to be making sure that you are, buying on dips. And so, when taking a look at the trading ranges for GLD, for example, I mean, this is right at the top end of the trading range. You actually did get a 1-day drop to the low end of the trading range on September 10th. So, so you just have to keep in mind the ranges for those who are Macro Optics members. But yeah, I mean, you got to be quick on these things. But yeah, you want to make sure that you're not buying things at the top end of the trading range. Should someone dollar cost average or wait for a pullback that never comes? Well, again, I can't give you direct financial advice, Anon_Human. But when it comes to our process, we like to make sure that we are taking advantage of things when they are having a discount and close to the low end of the trading range on lower volume, as well as decelerating volatility. And, you know, that point that we had last time was right around here on August 20th. I think it was August 21st, actually, that we actually put in the call. Um, let's see if I can just bring it up so that I can show you guys instead of me just telling you guys we did, because we want to make sure that we're providing proof and not just saying what we did. So let me see here. Here we go. This is from our coach Aaron in our macro optics community. As you can see here, adding long gold at GLD at 307, $307.18, 22 days ago, Thursday, August 21st at 9:55 a.m., right? Go back. That was right here. And so since then, it's been up, 9% gain on gold in 22 days, right? So that's called professional timing. And if you're not having people help you through those different opportunities, I would highly recommend it. Even if it's not our group, if you're not getting help from this, I would highly recommend joining a research community. Seriously. Okay, this is your wealth that we're talking about, right? And when you're investing in the markets, don't just think of it like you're trying to make money or like win the lottery. It's much deeper than that. This is about going to combat with these central banks by fighting them on them trying to devalue your purchasing power and you being invested in the markets in order to preserve your purchasing power, right? So you getting involved in the markets is you preserving your ability to go out in the marketplace and maintain the value that you currently have, if that makes sense. Right? So use investing as a way to combat against the central banks that are out of control, spending and printing money and devaluing your purchasing power. Could you please make a quick run on how China markets are doing? Some rumors that China will announce crypto investments and it will pump blockchain assets. Well, first thing is, whenever you hear stuff like that, just ignore that stuff, man. That's total noise. But yeah, we can take a look at the Chinese markets real quick here. Let's go to Asia. Saying here, yeah, I mean, it remains bullish. And you had an opportunity to buy some Chinese exposure on September 4th. But yeah, I mean, this thing looks like it's going to continue to go up. It's a bullish trend. You can have exposure with something like KBA or GXC. Those are two ETFs that my team and I like. But I mean, I would just stay away from the narratives and just look at the trend, right? Thanks a lot for clear and straightforward explanation why we need it here. Awesome. Thanks for the feedback and notes on gold. I recall you guys making the long call. Yep. Yeah. I mean, it's something where it just helps to have a process here, and it's not like us making calls, right? All we're doing is paying attention to what our model is showing, and just acting on it, right? What's happening with Tesla? Why is it rallying suddenly? Well, I mean, I'm not sure the reason why it's rallying, but I mean, it has remained in bullish trend here, and we actually talked about Tesla the other day because we started to see how volatility or volume was about to rise, and it could have gone either way. But the series of lower lows and lower highs we've been getting really since the beginning of August. So I mean, it's been signaling that it could have a breakout here. And yeah, we went bullish on our model, went bullish on Tesla. I'm trying to think here. Let me see if I can even just search it. Trying to remember when we went. Uh, mm, let's see. So Tesla was still bullish a month ago. Yeah, so it was, I mean, it was about like 6 weeks ago or so that we went bullish on Tesla. So I mean, it's not really a surprise that this thing continues higher. Share those ticker symbols again, please. That was from an old an older callouts and actual ideas post. So, but just to give you guys a little bit of a rundown of how we um, do our. Let me try and look for an old one here. So in our partnership circle, every single day we produce these reports called the callouts and actionable ideas, and this is essentially what these reports look like. And so if you want some in-depth stuff like that, just book a time with me on my calendar. You can just go to our website here, macro-optics.com, go to book a call, and then you can just book a time here, and we can discuss everything in our partnership circle. I would discourage people, if you don't have at least 50,000 in your total portfolio that you're managing yourself, then I wouldn't necessarily recommend our partnership circle just yet. But we do have our other membership for $47 a month, and you can try it out for 7 days for free before you commit to anything. We want to make sure that it's exactly what you're looking for there. Again, apologies about the voice right now. Getting over a little bit of a cold. Watch Catherine Fitz on Danny Jones' podcast. What is that? Who's Catherine Fitz? Let me see here. Let's see. Oh, yeah, I think I did see this a while ago. This one here. Yeah, we won't go there. Yeah, I did watch that, and I agree. I agree. But yeah, lastly, I'll just show, we're going to try and do this market dashboard on our website where, you can get any type of like heat map or advanced chart so that people can do like their own charting on here. If you don't, for whatever reason, you don't have access to, some of these, but, yeah, we're going to be putting up, some of these so that people can just take a look at a little bit easier, of like the exact assets that we look at every single day. So, but yeah, keep that in mind for next week. But all right, we're going to go ahead and end it there. Appreciate everyone for joining. Have a great rest of your weekend, and we will catch you on Sunday's Sunday Macro Wrap Up. Bye, everyone.